Prior to ASU 2013-11 being issued, there was diversity in practice regarding how an entity would present a liability of an unrecognized tax benefit when a net operating loss or tax credit carryforward exists. ASU 2013-11 was issued to eliminate this diversity. My name is Billy Williams, and I'm a senior manager in KPMG's Department of Professional Practice. Welcome to today's podcast. Under ASC 740-10, which is formerly FIN 48, a liability is recognized for an uncertain tax position when it does not meet the more likely than not threshold of being sustained. You might also have a situation where an uncertain tax position meets the more likely than not threshold, but the position is not highly certain, which could also result in a liability. One question that had been raised was whether the tax liability for an unrecognized tax benefit should be presented on a gross or net basis if the unfavorable settlement of the tax liability will ultimately end up using the NOL or tax credit carryforward. In that situation, no cash will be transferred to settle the liability. We've just taken an NOL out of our back pockets to satisfy the liability. Prior to ASU 2013-11, the issue of gross versus net presentation on the deferred tax asset for the carryforward and the tax effect of an uncertain tax position was not specifically addressed under U.S. GAAP, creating diversity in practice. That brings us to ASU 2013-11. ASU 2013-11 was issued to eliminate the diversity in practice regarding gross versus net presentation of the uncertain tax benefit. The ASU requires that an unrecognized tax benefit be presented in the financial statements on a net basis with a deferred tax asset for a tax loss or credit carryforward when either the tax law requires the use of the tax loss and credit carryforward to satisfy amounts payable upon disallowance of the tax position, or if the use of the tax law and credit carryforward is not required by the law, then one should determine if the tax loss or credit carryforward is allowed under the tax law to be used to satisfy the amounts payable upon disallowance of the uncertain tax benefit, and the entity intends to use the tax loss or credit carryforward to satisfy the amounts payable. So again, either there is a requirement by law, or the tax loss and credit carryforward is allowed under the law and the entity intends to use it for the purpose of satisfying the amount payable upon disallowance of the uncertain tax benefit. If the tax loss and credit carryforward does not meet these criteria, then the unrecognized tax benefit should be presented gross in the financial statements as a liability and not combined with the deferred tax asset. So let's go through a quick example to illustrate with Rich Industries. They take a position in the U.S. tax return that reduces their taxable income by $250 and ultimately reduces their taxes payable by $100 given the 40% tax rate. In evaluating their tax position, they conclude that it's less than 50% likely of being sustained, so they recorded a liability for the unrecognized tax benefit of $100. Also, in recent years, the company has suffered some losses, which resulted in an NOL carryforward of $250 that can be used to offset future U.S. taxable income, and the deferred tax assets are also expected to be realized. So in this case, when considering the proper presentation of the unrecognized tax benefit and the NOL, the $250 of the NOL carryforward can be used to offset additional taxable income that would result from losing the uncertain tax position, so the NOL should be presented net of the liability of the unrecognized tax benefit. At a high level, there is a liability for unrecognized tax benefit of $100, a deferred tax asset for the NOL of $250, and all we're doing is essentially netting down the $250 NOL by the $100 tax liability to arrive at a net deferred tax asset with the NOL on the balance sheet of $150. It should be noted that this ASU does not impact the gross presentation in the tabular roll forward of the unrecognized tax benefit. So the $100 uncertain tax benefit should continue to be presented gross in the tabular roll forward. As mentioned earlier, if there is not a requirement by law to use the tax loss or credit carryforward for the purpose of satisfying amounts payable upon disallowance of an uncertain tax position, the entity needs to assess if the deferred tax asset is available under the tax law. The assessment of whether the deferred tax asset is available is based on the unrealized tax benefit and the deferred tax asset that exists at the reporting date and should be made presuming disallowance of the tax position at the reporting date. For example, entity should not consider the timing of reversals or the expiration of deferred tax assets to evaluate if the deferred tax asset will be utilized prior to the statute of limitations of the unrecognized tax benefit. The gross or net presentation of the unrecognized tax benefit and the tax loss or credit carryforward will not impact the determination of the valuation allowance conclusion, since the unrecognized tax benefit provides a source of future taxable income under current guidance, ASU 2013-11 only impacts the presentation and disclosures of current and deferred income taxes and does not affect the recognition and measurement of uncertain tax position. As mentioned in the example, this amendment does not affect the amounts public entities disclose in a tabular reconciliation of the amounts of unrecognized tax benefits because the tabular reconciliation presents the gross amounts of the unrecognized tax benefits. The good news is there are no new incremental disclosures under the ASU. However, disclosure requirements for changes in accounting principle will be applied if applicable. The ASU is effective prospectively for public companies' fiscal and interim periods beginning after December 15, 2013, and the same for non-public companies beginning December 15, 2014. That concludes our podcast on ASU 2013-11. You can find more information on this ASU and other helpful information and reference materials on our Financial Reporting Network webpage included on this slide. Thank you for listening.